Welcome back, folks, once again to TalkinStocks, where we interview top public company executives to give us some insight on where they are today and what the future may hold. I'm your co-host, George, with a J. And without further ado, the man that once hooked a Loch Ness Monster, but threw it back. Your host, Dan the Stockman. Dan, are you there?
I'm a sportsman. You did an investor call the other day, and you must have said something that got people's attention.
I think that's the big question is when is this going to be stop being a tomorrow story, right? What we're seeing now is that the backlog that we've been building over the past couple of years is now starting to go into the ground. Not only is the backlog going into the ground, but also the backlog continues to grow. So even though we're putting sales in the ground, it continues to be replaced on a daily basis with new projects. It's important to note as well, too, is that besides the ones that we're landing, we're working on so many other large, significant projects right across North America that will come to fruition in the next year or two as well. So, again, everything looks positive for the future, and I think that's the message that I got out in the webcast.
One of the things that I had mentioned was maybe some of these guys will just go somewhere else. Did any of that unfold, Jeff, or did they all stick with you with those projects, and then now that's just kind of manifesting, or did some people kind of fall off the boat there, on this tomorrow story thing? Yeah,
did
projects
the
themselves.
Yeah, the customers. With someone else,
that's a very good question, because we didn't lose any projects at all.
Wow, man, that's incredible. Yeah.
A good example of it is the North Carolina project that we were awarded back, I think it was in December of 2019. That project was supposed to go into the ground the following year.
Right.
It was a $12.3 million U.S. project at that time, and it hasn't gone into the ground yet.
No
but I'll be happy to tell you that it is starting, or it has started, and we will start pouring our project early next year, probably by the end of the first quarter, and it will go quickly.
Oh, wow.
And that project that was $12.3 million U.S. has now grown to almost $16 million U.S. Because of the increased costs and stuff like that, and other things that are required to be done. So that will largely go into the ground next year just by itself, that one project.
So it actually grew in value, huh?
Exactly.
I mean, with some of these projects like you're mentioning, we're on this shortage. Is that something that we're looking for a solution somehow to?
Yeah, the one thing that we've done a really good job with, even before the COVID situation, the current cement shortage situation, is not only did Cematrix Canada have very strong relationships with Lafarge and other cement suppliers, but the companies we acquired in the U.S. did as well. Particularly Pacific International Credit in Bellingham, Washington. We do a lot of tunnels in the Texas, or they do a lot of tunnels in the Texas area, so they have a very strong relationship with Martin Marietta from a cement supply perspective. So that was very good. They also have a very strong relationship with Cal Portland. We ourselves in Canada work with, we have an arrangement with Lafarge, the largest cement company in the world, but we also work with the others like Lehigh Cement and St. Mary's and others. So we're doing the best we can in the circumstances to continue to maintain and grow those relationships, and they help us get cement when others don't get it.
I just want to say, this is a show about stocks, and we're experts at stocks, but really we don't know anything about the stock market itself. And the best I can tell is stocks go up and then they go down. That's just the way it works. I was writing about you guys the other day. I mean, you can look at Amazon, you can look at Tesla, Facebook, all the world's most favorite stocks. Well, just in the last 6 months, if you were a long-term holder, you would have given up all these gains you had accumulated in the last 4 or 5 years.
No, exactly.
So these stocks go up and up and up, but then they go down, and the business keeps on running and going. The only thing that changed was the stock price. And if somebody sees it as hey, it was 80 cents and now it's 20, it's arithmetically a lot cheaper. Same business.
In our business, for example, and this is the same with other businesses, even though the stock prices has gone down, that doesn't mean the value of the business hasn't gone up. It's just that's where the market is today. It's not only Cematrix, but even some of the large, construction companies are trading at 50% they were a year and a half ago.
I don't know, at least in my 15 years or so doing this, maybe one of the biggest mismatches between private equity valuations and public valuations, you're seeing companies get acquired and things at 50% or 100% premiums, and your goal is to become $100 million revenue business within the next 4 or 5 years.
And absolutely, and that hasn't changed, right? So that will happen, and it's been delayed by a few things like COVID and the cement supply issue, but it still will happen, and that is still our goal, and that hasn't changed. And frankly, in the background, it is happening, right? So we had a strong growth, and you'll see our year-end numbers come out in a few months, and next year we'll see probably the same growth again in sales. So if it's up over 25-30%, then that's going to be good not only for Cematrix but its shareholders as well.
Coming into 2023, what's a milestone that we could be looking for?
I think the milestones again is there's a couple of things that are going to be people that keep aware of is that we have over 80 million in our backlog, and last year, remember, if you go back, we did 22 million Canadian in sales. 26 million in Canadian the year before, and it's going up quite a bit this year, and you will see that continue to next year. So, investors from our perspective, we can talk about this, but just keep an eye on the news releases that will be coming out over the next year, and it's going to reflect that continued growth in our sales will become, profitable next year and generate a very strong EBITDA. You start to see the margins and the EBITDA grow quite significantly because we're past break even. The other thing you look for is that we have a lot of cash in the bank, and we're looking at other acquisition opportunities to help us not only grow the sales side of it, but also expand into regions in the U.S., particularly the Southeast and Southwest, where we do projects now, but we're not located entirely. So
you guys had done a glass deal, something with the glass. Is that something you're incorporating into some projects here for the future, for the new year, or is that kind of still on the sideline?
Well, Cematrix is doing, besides its investment in that, is we're actually selling foam glass as one of our products, or we're assisting Glavel as the company that we invested in selling their product and helping them get approvals as well. So it is in the background growing. As is the Cematrix that we talked about, and it's got a very, very strong, promising future.
One of the good slides I like it's the case study on environmental and cost savings on a project Cematrix did in Toronto versus traditional construction. There's a 40% less cost, 25% less emissions, 70% less excavation, 75% less trucks. So, one of the comments that was made by Jeff was how Lafarge, this important partnership, and they're, of course, one of the world's largest suppliers of concrete, they will grow more as they try to move towards these environmental savings and environmental efforts, because the cellular concrete is just more efficient. As Jeff says, the applications are too numerous to mention. The cellular concrete is lightweight, it's easy to pump, self-leveling, and faster to complete. Again, this long proven track record dating back to the Roman times. My final quote from Jeff here: we know we have 80 million in backlog, and we know we're landing new contracts every day, every week, basically. Our business model hasn't changed. The value of the business has actually grown during this difficult time of the last few years. All we can do is execute, generate EBITDA and cash flow, putting the product in the ground, as they say. So, in this long-term track record that I love, a 10-year chart of higher lows and higher highs, be patient for a few years, you can project out and see, man, this is a business that can be generating $15-20 million a year in cash flow.